There's really four major trends happening right now that are driving the adoption of alts. Number one is from the advisor perspective. The 60-40 portfolio is just not performing. It's not withstanding challenging markets. It's not, of course, taking advantage of all the opportunities that are out there. And especially in markets like today, you're seeing advisors and their clients quite frustrated with just the 60-40 model, thus the need to include alternatives. The second area there is that alternatives from the advisor perspective are performing. Private equity, private credit, real estate, hedge fund strategies are delivering today. The second trend that I'm seeing right now that's really driving adoption is from the asset manager perspective. They're really working hard to create products, investment funds, and vehicles that are actually more usable, user-friendly for the advisor and their end client. Third area is regulatory. The SEC is taking steps to make it easier for advisors to have access to alternatives. The SEC, I think, has realized that alts have performed. There's an institutionalization of alternative investments, transparency, and they're more comfortable creating more lanes for more investors to have access to alternative investments. And then, of course, the last one, and my favorite, is the fact that technology has really transformed the way that advisors can easily understand, easily access, and easily transact in alternative investments. And that, of course, is what CAIS does with our platform. Advisors need to incorporate all alternative investments because they need to have all the tools available for a proper outcome. Really, if they're limited to just equities and fixed income, which now are both going down in this market, they're really limiting their options to be able to withstand ever-changing markets and capitalize on opportunities. Remember, so many companies are private. They're not accessible in the public markets. To not being able to have access to that is really limiting yourself from a huge portion of the economy and therefore the opportunity that rests in that growth. Well, this is an enormous opportunity for alternative asset managers. Over the next 10 years, it's anticipated that between $5 and $10 trillion will leave traditional allocations and move towards alternatives. That's a huge growth opportunity for them to increase their investor base and diversify it with wealth management. So as they think about expanding their businesses, they are also very focused on the wealth management channel, which is also allowing them to really think through the best way to create investment funds and products and strategies for the wealth channel.